Billionaire David Rubenstein says don't worry about inflation. Here's why. In this video, I'm going to talk about what billionaire David Rubenstein has to say about inflation. And how you shouldn't worry about it if you're an entrepreneur. He makes some really good points that I think a lot of people need to hear. Make sure you stay tuned and I'll explain everything in detail. Do you want to stay updated about the economy and how our affluent millionaires and billionaires think about this subject? Make sure you subscribe to our channel and turn on the notification bell. A lot of billionaires and business leaders are sounding the alarm about inflation, the stock market swoon in January, and the economy in general. However, David Rubenstein isn't one of them. The private equity billionaire and Carlyle Group co-founder says, the economy will be just fine. He took to the airwaves on Tuesday to assure the American public that inflation talk is overblown. Also that the fears of an imminent recession propelled by COVID-19 are misguided. He also dismissed fears of how bad it's getting in the stock market. I don't see any big gigantic market correction of the type that's going to push us into a recession. Rubenstein said during a CNBC interview that he don't see that at all. I think the market correction will be modest, relative to what we've seen in the past when you have a gigantic correction. Rubenstein's Carlyle Group, one of the biggest private equity firms in the world, manages $301 billion globally. He's a major philanthropist, having donated millions to institutions such as Harvard and PBS. And he has had a front row seat to historic inflation, serving as a top advisor to President Jimmy Carter, whose presidency was crippled by the great inflation of the 1970s. Rubenstein said that this is not the same situation the US faced during the stagflation crisis of the 1970s. He said that during that time inflation was in double digits, since Fed funds rate went up to 20%. We're not looking at anything like that. Still, tech stocks started the year with a shocking plunge, propelling the S&P into correction territory in January just as the Federal Reserve signaled its intention to hike interest rates at a hawkish clip. Inflation is at a 39-year high, as consumer prices jumped 7% in 2021. The Fed also warned that it's time to retire the word transitory for inflation, meaning prices could be rising uncomfortably for longer than expected. Federal Reserve Chair Jerome Powell said during a congressional in December, factors pushing inflation upward will linger well into next year. Economists polled by Bloomberg expected a 7.3% rise in inflation for January. But it was much higher than 7.3%. Rubenstein bucked economists' predictions of more trouble ahead. Increases in the consumer price index are temporary, he said, and he even went so far as to say inflation would dip back to 4% or 5% this year. The Fed will probably raise rates by 25 basis points in March, but it won't raise them in every subsequent meeting. This isn't the first time Rubenstein has such a positive tune on the situation. In November 2021, he told CNBC that comparisons to 1970s-style inflation were incorrect. He said that the structure of the economy is different today than it was 50 years ago, and more resilient to threats of inflation. Industry is more diverse, unions aren't as dominant, and there's decreased reliance on foreign sources of oil. Inflation would run above 2% for a while, but would come down by the spring. Even the market doesn't seem unduly concerned about inflation. To be honest, we're not so sure if it will come down soon, since we're already in springtime. However, we will see what will happen the upcoming weeks. We can at least give him the benefit of the doubt. In our next video we're going to talk about the 7 effects of inflation and how you can protect yourself from the consequences. During that video we will give you life-changing tips, so make sure you will be back. What are your thoughts about the whole situation? Let us know in the comments. That was it for today. Thank you for watching. If you enjoyed this video, make sure you give it a thumbs up and don't forget to subscribe for more news about affluent millionaires and billionaires.